Good morning, it's Harvey Jackson. So the International Energy Agency release of reserves after their G7 meeting is very unlikely to keep the crude prices in check, especially if the war continues here. So the IEA has recommended a release of, I think, 400 billion barrels, which would be substantial. I think the last time recommendations for even Russia, Ukraine was like 182, so it's over double that value, but it's still not going to be significant enough, I don't think. And a lot of the commodity values are on the rise again, and this is the result is three vessels were hit by projectiles from the Strait, even after the Israel and U.S. hit Iran hard last night, and they're still fighting back. I've said this to a couple or a few clients there yesterday as well. This area of fighting has been going on for thousands of years. So, and I don't know when it started, but it's obviously there's been fighting there. So you think you might have them cornered in day 11 of a war. Um, don't discount that at all. All they know is to fight. Diesel markets upended by Middle East conflict, threatened global economic slowdown. No shit, Sherlock. Um, the only thing that there's corn expectations were just maybe a little bit more supply, but the other one that a lot of people didn't pay attention to is the U.S. oil or the soybean oil yield. It's lower than expected, and that is maybe something to pay attention to. As the oil yield is low, it creates some other problems for sure. Here's a trader from the NDP. So you had more defections crossing the floor. Um, so they very likely have a majority, so they're going to be able to push through their green agenda narrative. So separation is probably going to be a bigger discussion more than ever. Hopefully, they can actually maybe get things put through that they say they're going to do, or they're just going to keep blocking and spending like unbelievable. The stupid government. Have a look at the weather here. So looks like it's going to be hot and dry towards the end of the month. It's back California into the plains. Looks like the even the prairies will be a little bit warmer there as well. Lots of active weather, tornadoes, you name it. Uh, Rain going across. So some of those dry areas are getting moisture here as well. So just a quick look at the markets here. Canola is up $10 at 7:30. Rapeseed is 508 up 750. Soybean oil is up at 1.84 cents, so 67.46. Palm oil is up as well. Is in sympathy. Crude oil up a couple of bucks. Diesel fuel is up 9 cents, or close to 10. Soybeans are up as well, and your wheats are all up. Corn moving up with the wheats, of course, and the Canadian dollar's up as well. Quick look at it. So our steep trend line got breached yesterday. Now it looks like we're going to try to maybe change the trajectory of that curve. So you might be changing it, uh, with a less steep going up. But you could say that your short-term moving averages didn't get breached either. So the trend is still up when you just look at canola. But when you look at rapeseed, the trend is still up there as well. The prices in it's $70 or just shy of $70. The price differential between European canola and rapeseed in price in Canadian dollars. So that won't even pay for the freight to get through there from Thunder Bay to Europe. So they're definitely that price differential is not going to encourage a whole lot of sales going that direction at all, unless they're already made. Right, but soybean oil futures. So the difference between the canola and this one, you can see that this one it didn't even change its trajectory at all. So it's still supported. So is soybeans and your crude palm oil. While it's just a sympathy follower, but when you look at what has changed from January 1st, is there a slow increase and then boop, and now we've got a little bit of a price differential for just even the diesel fuel is and the crude oil are the highest, and then middle is your soybean oil, and then your canola and your soybeans don't even look like they changed trajectory, even though they have. Here's your crude oil. So a quick look at wheat. Nice move up that we've gotten on wheat, and you just looking back on comparison on the continuous chart. This is still an upside target that I would be looking for new crop, $7 futures first, and then lock in basis. So depending on, I am not too excited about just taking a basis. So anything October, NOV, DEES, I would be looking at locking in that $7 futures on some wheat, and then waiting on the basis when the demand starts to pick up. Here's your Kansas look as well. Long-term trend got through there, but still needing to trade right around that 640 area on the front month, and to beat that higher high to be bullish here. Here's your Kansas and your Kansas or Chicago futures there as well. So you're looking at making some higher highs. One level is here, and the next level is going to be right around that $7. Corn futures still looking at that $5-ish area for futures first, or futures contract, before really getting too excited about new crop pricing. And that's all I have for you.